Since its advent, UPI has made digital payments free for everyone. But what if that free model itself is becoming too expensive to sustain? That's exactly why the government has proposed a law that many believe will bring back charges on UPI. But that's not the full story. The Finance Ministry has proposed amending the Payment and Settlement System Act 2007. Right now, Section 10A of the law completely bars banks and payment services providers from charging merchant discount rate or MDR on notified payment modes like UPI and RuPay debit cards. The amendment removes that blanket protection. Instead, it gives the government the power to decide through future notifications which digital payment modes remain free and which could attract MDR. That's an important distinction because the amendment itself does not bring back MDR. As of now, absolutely nothing changes. Customers can continue using UPI for free. Merchants also won't suddenly start paying MDR. The government has not announced any charges, notified any payment mode, specified any transaction type, fixed any MDR rate, or given any implementation timeline. When and if the Parliament passes the amendment, a separate government notification will still be needed before any charge can be introduced. The answer lies in the phenomenal growth of UPI. In July 2026, UPI processed a record 23.66 billion transactions worth 29.88 trillion rupees. That's also a 19% year-on-year increase in transaction value. For comparison, June saw 19.46 billion transactions, while May recorded 23.2 billion transactions and nearly 29.9 trillion rupees in value. Today, 88% of all digital transactions in India happen through UPI. But processing billions of transactions every month isn't free. Since January 2020, the government has kept MDR at zero to promote digital payments, compensating banks and payment firms through an incentive scheme. The Parliamentary Standing Committee says the 2,000 crore rupees allocated for 2026-27 covers only a fraction of the industry's costs. Earlier, the Payments Council of India estimated maintaining and expanding the ecosystem requires nearly 10,000 crore rupees annually, while government support stood at 1,500 crore rupees. The committee warned that the current model is financially unsustainable. If MDR ever returns, customers still won't pay it. MDR is a fee paid by merchants to banks and payment service providers. Industry estimates suggest that if charges are introduced, they may be limited to large merchants and high-value UPI payments. Bernstein estimates transactions above 2,000 rupees account for only 4% of transaction volumes, but nearly 70% of transaction value. But remember, that is industry speculation, not government policy. For now, UPI remains exactly what it has been for years, free. The proposal simply gives the government the flexibility to change that equation in the future. Follow Business Standard for more such stories.